The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, and pleased to be here on this Friday the 26th of April. Just rang a bell. Years ago, I used to, almost every year, I'd be playing a concert on the 26th of April. Just I don't know why it worked out. So that rang a bell there. That was in my days as a professional musician, clarinetist, conductor. And thank you for Tom, Daryl, and Steve doing the three of them doing a great hour, and Steve kicking it off here at TFNN 9 o'clock. Just have a fabulous program all day. Of course, today you have Nico Dehan coming up straight after to me, Nico and Paige Clark, and that'll be basically on health, on your lifestyle, on your eating style. It's a great show. Then, of course, Daryl Martin, you got Dave White, you got Tom O'Brien wraps it up 4 o'clock till 6 o'clock. Don't forget, Daryl and Tom are coming right here to the Boston area, May the 11th. 4-hour free workshop, but you got to sign up. I'm pretty sure it's beginning to fill up like crazy. Get your name on the list. All right, let's go through the market. So, what I'm looking at this particular point, Lorna says in the den, hope it wasn't the bell. They don't ring at the top, Basil. Oh, no, Lorna, they do ring a bell. It's either a peak F, or it is a doji candle, or it's a round number. I had an opportunity today to try to short one of the best stocks on the NASDAQ, one of the best stocks all around over the last few years. Had a round number close yesterday, just a point or so off its high. I took a short position. I had to do it just as part of the ChapmanWave, trying to identify those major tops that really kick off hat-trick tops. I don't know if this would even do it, but we got stopped out for a tiny 1% loss. It's still on my list, this particular stock. I think it's ringing a bell. We are really close. I'll try it. I'll do it again. So yes, we do get bells. Sometimes it takes a little while to recognize it was the bell, but the bell will be there, and could be Time Magazine with a picture of whoever it is, and that wraps up that particular personal thing's ability to move to the upside. We'll see. All right, so the Dow is up 10. Now, I've got to talk about this very quickly. Well, first of all, let me get rid of these charts. If you're looking at Tiger TV, right there, I'm showing this. This is we've got some dentists who trade the NASDAQ. I'm showing the NQM. That is the now this is very interesting. This is the NASDAQ E-mini. I didn't actually trade the E-mini. I trade the NASDAQ. I trade the S&P E-mini. Look at this beautiful cup formation. Breaks out. It goes to a peak F top. There's that peak F. Now the bell rang because the stochastic on-balance volume started fading right there, the doji top with a silent doji candle right next to it in the 30-minute chart. It's come down where to? To a trough F. The trough F has stopped almost at the 200-period exponential moving average, but the stochastic and the MACD are saying, hey, be careful. You haven't yet got the sign. Not until you break above the previous high of 2840.75 will you be out of the woods here to say, great, done a little consolidation, now you can move higher. Let me just do this here because this is the 120-minute chart, and the 120-minute chart of the E-mini went to exactly left side, right side price time match. Let me just type in, I think I got it there, but it's being hidden. Left side, right side, cup formation. What is the cup formation? Cup formation is just a beauty. Look, you go from the left side, 1593 high, back around the 11th of April, come down to the 1530 low bar. Sometimes the low bar is exactly the pivot point. In this case, it's exactly the pivot point. What? For a reversal to the upside. And what do? You go up to the top, and you just miss it by 2 bars. It's 220-minute bars, and about 3 or 4 points, going all the way from 1530 to 1588.25. Just missing. No, it's a little more than that. No, 5 points, less than 5 points. Now it's come back. It's making another potential handle formation, but I'm getting a little I must say, I'm getting a little bit more cautious. I thought a lot about the call I had yesterday. I had a call from Bruce from Lakeland. I'm talking about his kids and all with the IRAs. What should they do? And I said, it's because my monthly charts point higher. Yes, we could pull back, but the end process is that you want to be looking at gains. It's not so much that you want to time it that you can get out at somewhere near the top and get in somewhere near the bottom. That's perfect. But for most people working, not watching this, it's better just to keep having profits come back. I got from grandchildren that my wife and I put money away back. I knew it was the exact top. I think it might have been 10,000. I don't remember what it was on the Dow a few years ago. I even said, this is January. I said, I know it is, but this is the way we planned it. We're going to do it. And then I'm looking at the result. Looked at it, came the other day. I didn't even look at it. And I look at it. Lovely gains. That's all you want. I didn't do the timing there. There are times where there is a certain portfolio that you need to be looking at as longer term. It's a portfolio you actually, as long as you feel you're in a particular trend, that's a portfolio you want to add to on declines. You don't really want to take away and keep timing because you might make a mistake. Then there are other portfolios, a medium-term portfolio, a short-term, a trading portfolio. Those are all things that should be part of the whole package. Not only that, if you're looking at a portfolio as your entire, I'm waving my hands here, let's call it your entire wealth. Now, wealth, it might be debt, I don't know, but let's just call it wealth for the moment. And let's just say you do own your home, or you've got a home that you haven't paid for, but it's there. So that equity is part of what you're looking at. So it means now you've got real estate. Let's just say you have a little gold, you have a couple of gold coins and things. That's part of your portfolio. That's your insurance. Those are the things you've got to be thinking of. So to be able to give advice under these circumstances to someone, say, hey, I think this would be a perfect time to take 20% off, and that 20% off you're going to put back on June the 27th at 10 o'clock in the morning when the Dow hits 14,110. I find that is beautiful in theory. Does it always happen? Very, very seldom. Now, I like to think of the ChapmanWave as the waveform that never sleeps, and it really does keep one guided, keeps one in the trend for a very long time. But then there's the human side that says, I see something, I want to buy it. I see something, I want to short it. And then the emotion gets in the way of the thinking, but the technical part of it should just be structured in such a way that even if you're wrong, it was right. You want to be right when it's right. You don't want to be wrong when it's right. But we can't help, for instance, shorting this morning. Shorting this particular stock at 215.98, I think it was. Gave it a $2.20 stop. Just got taken out, and now it's trading at 214.53. Is that, well, big deal. I've got the technique. The technique says you're right to be thinking this way. Maybe my part of it was that I didn't give it a 4-point stop, a 2% stop, 440 or something like that. It doesn't matter. The way I'm looking at it, I'm practicing my technique with very tight stops. If it worked this time, it would be great. I suspect we're going to get another. And that's the way you got it. That's the shorter term. In the intermediate term, we've still got stocks that we had a long time. One stock we've had since, I believe it's since November. And we've only got a small part left, but it's still one of the best acting stocks today. And that's the way we want to be looking at the market. So now let's go to something very important. We want to know what's going on. The Dow's up 19 at 14,718. The S&P is down 4.75 points at 1580. So it's weak. The comp index is down 12 at 3277. Now I'm going to jump from this E-mini chart, the 120-minute chart, and I'm going to make a couple of points as I close this out. The weekly chart is almost certainly today going to give a peak D in the E-minis. And a potential, I'm saying a potential, double top V-shaped pattern in the daily chart because it hasn't broken significantly over 1593. The S&P, as I do these, I think it's going to behoove us, at least for me, to go through all the different aspects of what I'm looking at technically. The peak F top that was made in the E-minis and the S&P cash at 1597.35 on the 11th has pulled back sharply, and it hasn't taken out that high. It's making a potential V-shaped pattern. I'm going to let that be for the moment because the stochastic is rallying. It's under 80%. The MACD has crossed positive, and I have to consider that is a positive. So my bias right now is to say that I've not seen a fulfillment of the upside activity in the Dow, and the Dow should carry the other indexes higher. Whether they go to new highs, I don't know, new recovery highs or new highs. But it's a peak D in the weekly, and yet the MACD is holding beautifully in the stochastics at 87%. No signal yet except yellow lights flashing to say on-balance volume is falling. So it's got a lower high than at peak C, and the relative strength is declining. But the MACD fast-moving average so far is making an M formation and is quite good. So let's put that together in a nutshell with some of the others. The Qs, 1, 2, 3, 69.51. All it needed was 70.18 for me to say, you know what? We could, in fact, be starting a leg C to the upside that could go to D into next week. And so far, 69.14 is the level to watch on the Q dailies. But the weekly chart says I've got a peak C, a G/C in place. There is a really good chance from everything I'm looking at, there's just enough strength left in enough NASDAQ stocks to squeak to a new recovery high above 70.17 to start leg D in the weekly next week. This is my thinking. I'm thinking out loud. And then we're going to see if there's going to be a double top. Look at the work. Peak A, B, C, D, E, F, G, which is being possibly renotated if there's a 1 penny higher, move above 70.17 to leg D, so you get two buy modes. Taking all that time when you plunge from 70.58 last year down to 61.31, is it going to get real tired and squeak to the 70.59 level to make D in the monthly? Or is that going to be the pullback that we're all looking for coming up real soon that takes us down? I'm only saying 6% to 12% if that's the case. And I'm not looking at sell in May and go away. I just don't think I see enough weakness for that kind of action. I do see a possible sell in May, but not yet go away. That's the M. Now let's look at the next thing that's really important. If you look at something like the IYC, I've not updated this, so the IYC had a high of 100.24 on the 12th of April. The last high yesterday went to 100.22. So it's 3 cents away from making a new recovery high. But it's leg C. This is the consumer iShares Dow Jones U.S. Consumer Cyclical Sector Trust. And the monthly is in C, but the weekly is in E, and it could even go to an F because everything so far looks quite good. This is going to be an interesting week coming up. I'll be right back. Basil Chapman, 877-927-6648. Love to take your call.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. Basil Chapman, Dow's up 17, S&P's about 390 now. The gold contract. Let's look at GLD. I've spoken about this for a while. I only use volume in certain circumstances and in certain ways. It's just the way I see it in my own work. You know, everybody has their own way of doing it. And I wish I would love to, understand how other people do it, as I can use it with my own work. But thus far, I find that just the two things that I consider the most important. One is climactic volume spikes to the downside. That creates an uptrend that can last. It doesn't tell you the parameters. It doesn't say this is such a fantastic volume spike to the downside that it's so oversold. The price is oversold, that it's going to go to new all-time highs. It's going to make a V-shaped pattern. What it does say is that there is a potential for a rally that could take long enough for everybody to have forgotten that previous sharp decline. And at some point, there's a good chance that you will come back and get close to it or test it like that H pattern, what I used to call the dreaded H. I'm calling it the H pattern, lowercase h. And that's what I'm looking at here. There was a volume spike and the GLD, 93 million. On the 15th of April, that was the low. It didn't coincide with many others. A couple of gold stocks it did, but mostly it didn't with the gold contract. Only with this. And now what we've got is you've got 1, 2, 3, 4, 5, 6, 7, 8, 9. Leg B up 9 bars, 9 days, filling the gap. The last gap was 143.43 was the low, and today's high is 143.43 to the penny. It says we're getting real close to some kind of a pullback. And that's very important. And that pullback should take you to at least 139.89 is the 9-period exponential moving average. If it closes decisively under that, it says it's going to be a very big struggle. You don't have to come back to the 130.51 low, but you could go sideways, creating the H to an M to a larger M until the pattern breaks down and goes under 130.51. What is that? It doesn't tell you how high it's going to go yet. But the height that I'm looking at is that there's a chance that the middle of this candle that we're looking at of the 12th of April with a high of 148.85 and a low of 143.43, which is exactly what we touched today, the middle could be hit. I'm going to take calls in a moment. I just want to finish this thought because I'm liable to forget. The weekly chart has a real nice candle because it's gone above the little, it's like a little bit of a dragonfly candle from last week. And look, it's gone above the 200 period moving average in the weekly. The monthly is the one that's telling me, I'm not going to say for sure, but I'm going to say there's a really good chance that there's going to be a ChapmanWave Roman candle set up here, and that the 130.51 level will be tested in the months to come, regardless how many weeks this particular counter trend rally takes. So with that done, I'm just going to finish up the things. We've got copper's down 3. You know, this copper within the trading range, down 3 at 320, but it was a great move yesterday and the day before. So, and crude oil is down 48 at 93.15. Bonds are up 26.30 seconds. I'll talk about that in a moment, but we've got a caller online. The dollar's down 30 cents, and we're going to go to Charlie in Atlanta, Georgia. Hi, Charlie. How are you?
I'm fine, Basil. And how are you doing this morning?
I'm doing very well, thank you.
I'm calling about Priceline because on the 22nd, it hit the 100-day simple moving average, and I covered half my position. And now it bounced yesterday above the 9-day and 50-day simple moving average.
And today
it broke right under it. So This morning, I went ahead and shorted at the 707 and at the 700. Want to know your opinion.
The 707 is the one that's good. The 700 is the one that might come under a little pressure only if there's a turn to the upside. So far, there's something I wanted to talk about, and I'll do it now in the context of what you're referring. You're talking about the NASDAQ stocks. So the price line, PCLN, is down 12.84 at 698. Now, the pattern that I was talking about just a moment ago about the NASDAQ taking so long to worm its way back to the top is a little different. There's a pattern here that I call the Sears and Roebuck pattern. This is the Sears Holdings patterns. There was a pattern once that I saw it once, and then I saw it over and over. But the first time I recognized it as something that I really need to keep in touch with was an H pattern, lowercase h, that makes a double bottom, but at a high-level consolidation. And that becomes a cup formation, which takes you back toward just over the previous major high. That was 774.96, and the last high was 745.24. So it's gotten close, considering it went down to 553, but it hasn't broken above. The weekly chart says if it closes underneath the 698 level, let's call it 697 for the moment, 9-period moving average, that's going to be the second time in 2 weeks. And the monthly chart has the same pattern that I call the right shoulder failure potential. Let's talk about it as soon as we get back. We're looking at Priceline, the chart in Atlanta. I'll also talk about the song Georgia on My Mind. I'll be right back.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Ignitions Hour, and I just wanted to go through a couple of things we're on right now. Let me just finish this up if you don't mind. I just need to put an A and a B. And this is what I'm looking at here. So we've got Charlie in Atlanta on the line. Oh, I just wanted to tell you, Charlie, I don't know if do you know where the... You know how people love to hear Georgia on my mind, and I think most people think of the state of Georgia, right?
Right.
Well, this is a very interesting thing. That there's a guy called Stuart Gorell, and he wrote words for certain songs. Didn't do much, but he was a good friend of Hoagy Carmichael. And he gave the words to Hoagy Carmichael. Hoagy Carmichael then wrote the song, and of course, Georgia, Georgia. And Ray Charles has a fantastic version of this. And years later, it came out that when he was interviewed, Stuart Gorell said, well, actually, I wrote it because Hoagie's sister, who I liked very much, was named Georgia. Mm-hmm. So that's interesting, isn't it? I thought it was interesting. So let's go back to Priceline here. Let's get back to some nitty-gritties. Priceline 120-minute chart made a peak B, and if it fails here, it's not good. If the price doesn't go to a D, it fails before a B fails at a B or a C. And at this point, it's sitting on the 200-period moving average in the 120-minute chart. If it goes underneath 697, I would say the price line is going to take a dive to retest the 683, maybe the low of just 4 or 5 days ago at 677.72. This is also what I'm looking at here. So let me just give you the quick scenario, because my sense from your question is that while you are quite prepared to take profits whenever you need to, that you would also like to sit with some kind of a position as a core position if there was a chance that price line was going to go down, not just in the daily but the weekly. Is that correct?
Yes. I'm at the point now, looking forward, it hit the 100 days on the 22nd.
Right.
Now, is it going to break through it? And then
Okay.
where does it go in the future? That's really my thought.
That's what I want to answer for you now, but I need to put it into context. It made a left side, right side price match from the low of 553.97 in the weekly chart back in the week of the 26th of October. This is really important, and I want you to put it into context, because what's happened here is that the time has run out, the price has run out, it just missed doing what it needed to do. There's still some internal strength, but that strength will wane, and I needed to put it quickly into context here. If you look at Google, these are the four, I wouldn't call them the leaders, but these are the four heavies of the NASDAQ. Google has made a peak D in the weekly. It's made a potential, and I say potential, peak F. I don't know yet. I've got an F/B in the monthly. And that's the reason why I'm looking at this, and I wanted to go through this with you quickly because it's so important. But the technicals are still very strong. So I don't know if there's anything like if there's a hat-trick top in Google and Priceline, and my Dow Quartet, GE, IBM, UTX, and Triple M are acting very poorly, there's a chance we are not going to see a new recovery high in the Dow. In fact, this today could be the turnaround day. I don't know, but this is what I would like you to look at. Google is acting, same thing, had a very strong move. It's pulling back here. A lot's going to depend on next week, because I've got the potential here for at least the daily and weekly to be giving sell signals strong enough that if Google goes underneath, it's 799. If it goes under 785, anytime next week, it doesn't even have to close there. Anytime next week, that will be very poor action. I said Google, and Amazon has already turned down. So you're getting less and less leadership all the way around. And Amazon looks to me like it made a peak E top in the monthly, which could turn out to be a hat-trick top, meaning time and price. That's the reason why I have to constantly rethink whether people should be taking money off now in the general market for a pullback or not. So far, I'm saying, it depends on your time frame. But that when you've got Amazon, Google, Priceline, and and Apple, of course, is having a little bit of a counter trend rally. I'm not going to include Apple in this particular crowd at this particular point. So here we go. I think for however you did it, I have to congratulate you for choosing to short Priceline on the pullback today. Whether it works or not, we won't know until later today or Monday. But so far, that was fabulous timing. And what I'm looking at here in my 120-minute chart is that if it fails after just a leg A and then a leg B, if it takes out just on a very short-term basis, 693.72, sounds like far away, but the way markets move these days, that could happen quite quickly. That will confirm that you're absolutely in the right situation. Then what I would say to you is the core position that you just got in, at the higher price, keep that. The other position will be a trading position, and if it starts to get towards 682 or anywhere close to the double bottom that's already hit twice at 677, that position, the trading position, I would take off. As you're getting, I wouldn't even wait for it. As you're getting close to it, I would take that off, or at least part of the trading position, and keep your core. On the upside, if by Monday there's a reversal and it goes above 713, all I can say is that is very good action, because theoretically it shouldn't get above the 9-period moving average of 702.50. So I hope that helps you, and congratulations. That's a real nice gutsy trade, and your thinking was absolutely correct, and your technique was very good.
By the way, Basil, you mentioned the 800-pound gorilla, which is the Google, and the 700 gorilla is Priceline. I actually covered on the 22nd Priceline, And when Google jumped up to above the 810 level, when it bounced back,
Right.
I shorted that at 810, covered it this morning at 803, and put my money back into Priceline at the 707 and then at 699 level. So I'm playing actually the two of them, and I find
That's
it's
fabulous.
Yeah,
so
I go
that's really good, because what you're doing is you're using your analysis on one to be able to go to the other and vice versa. Hey,
Exactly.
that is Charlie, congratulations. Good trading. I think you've got yourself a real nice position here. Thank you so much for calling and telling us about it.
Thank you for your help. Bye.
Have a great weekend. Let's go to Brian in Jackson. Hi, Brian. How are you?
Hey, Basil, how are you this morning?
I'm well, thank you.
First of all, before I ask you about AA, Alcoa, I want to thank you. I don't know if you remember or not. I called you last week and asked your advice on the gold GLD. I had
Yes.
taken a position right after the downfall, and you
Yes.
told me if the 132.65 held to hang on, and I did, and I got stopped out yesterday at 140 for a gain. I just want to appreciate the call on that.
Thank you so much. I want to thank you for telling me about that, and that worked out well. Good. And now you want to look at AA. You know, it's so interesting. Look at the chart of
AA, Alcoa aluminum.
Alcoa.
And I took a position 2 days ago at 8.25, and I was going to ride it up to 9, but I'm kind of concerned now, and I was going to get you to take a look and see where it might be heading.
Okay, so folks, we're looking at Alcoa. Alcoa, the best it's done since the 2011 high. That's not even its all-time high, but at 18.47 back in April 2011. Was that 2 years ago? Yeah, 2 years ago. It went all the way down to the most recent low of $7.90. I think that's the low. And that $7.90 was on the 18th of April. Now, what's really interesting about Alcoa is that it's making that pattern that I call the H that goes to an M formation. I talk about that in my CD introducing the ChapmanWave methodology, and that's where it then breaks the left side low. In this case, it went to 96, and that bar has to quickly push back up, which it just did, and it went to 9. Let me see. Let me get my pointer. It went to 9.37, and now it's gone to a lower low. It's gone to 7.90. Just modest lows, but this is exactly the pattern. This is like a classic textbook pattern of the ChapmanWave methodology, where you go from an H to an M and a continuous M pattern. Now, is this going to be the next? Because this is a good candle compared to last week's, which went underneath the cup low. That's very good. So now the question has to be, is this a trade? Is this a viable trade? Is it for me to say to you, hey, Brian, I think this is the one time that I would actually hold Alcoa. I wish I could say that. But let me do it this way. There is enough evidence to say that Alcoa is getting to a point where a decent rally, I'm talking about a rally of about 15% to 20%, should be underway. Now, I've seen enough times historically where the aluminums, and it used to be the steel stocks, actually went counter to a market decline. It was always amazing to me. And one person told me that's just because they're very slow. They only ramp up their production when the economy just seems finally to be getting some traction. And invariably it's too late, but it's still a very nice move. I don't know if Alcoa is about to do that right now, but this is my recommendation. If you have let's just say, do you have a starter position, or you just went with a full position?
I got in at 8.25 on Wednesday, 2 days ago.
But is that a position that you would want to add to, or you don't want to risk at all? What's the situation?
Well, I was going to try to ride it up to $9, and it got to 8.50, and then I started to take my profit, but I waited a day late. Now it's pulled back, and I'm kind of trying to figure out what to do with it.
Okay, so let me just give this to you real quick. It's trading at 8.29. The way the market's acting, I wouldn't be surprised to see a slow grind to the downside rather than the upside over the next hour or so. What happens in the last hour, because there's weekly closing of options, all sorts of things, that's something else. So I'm going to recommend to you, it's entirely up to you. You're in at 825. If you are prepared to take a chance that the low of 812, the day you got in on the 24th, 811, I would say that a 13 to 14 cent stop would give you that opportunity to see if this rotation that I'm anticipating is going to be coming doesn't include a rotation to the real laggards. And we might find, because I'm looking at Alcoa as well, that Alcoa is actually holding up way better, and that the candle I'm looking at in the weekly chart is really the start of a pretty decent, at least holding formation. So here's my recommendation. At least on part of your position, if you want, you can take something off 824 now. It's a penny below. You can take a part of your position off right now and say, hey, I'm not going to take a gamble. But some part of the position, why not put a stop in at about $8.11? Give it a little room through Monday. If it actually holds on Monday and closes at 8:30, it's at 8:30 right now. If it closes at 8:33 to 8:34, this thing has a chance to do what I was talking about, that counter trend move. And that's all I'm going to say. That I wouldn't get aggressive. Maybe you can take some off right now and say, look, I don't want to take a loss. Or take some off and say on that position, and then the other one you can say, you know what, I don't know what your original stop was, but I would say the stop of $8.11. It's worth a try, because if you're successful, that weekly candle says it could work its way to the high of 850 over the coming week if it's able to hold it above 824 on a closing basis. So I hope that helps you.
Thank you very much. Appreciate it.
Thank you very much, and congratulations on your JLD trade. Thanks for calling. Have a great weekend. Let's go to Bill in Boca. Hi, Bill. How are you?
I'm doing fine. How are you, Basil?
I'm well, thank you.
Great. I'm looking at, I got very interested in MPEL. Their growth rate, their earnings growth has been pretty good. And I've been selling covered calls and doing pretty well on that. And I was thinking about adding more of a position than I have right now in it. But it's been up like a skyrocket, and sometimes getting on those rockets, you can, they burst at some point, and then you're dead in the water, so to speak. Right.
So let me just do this, because I'm going to do the stock rather than the covered call aspect, because I think that's really what you want to know. In the day, I have not notated this. In fact, it's the first time I ever recall looking at this particular stock. What do they do? Entertainment?
Casinos in over in China.
Melco Crown Entertainment Limited, trading at 24.21, down 14 cents. Great action considering what's going on in the market today. Let me just do this live quickly. The last buy signal to buy mode. I'm just going to type that in so I can be working on the daily. I mean, visually, I can tell you exactly what I'm looking at. I'm looking at a stock. I believe I'm not going to call this F. I'm going to call this brand new buy mode. Peak B possibly coming today with a stochastic at 89%, and the MACD is still strong in the daily chart. It looks to me like it wants to go higher in the daily, and has 2344 as pretty important support. So we've got a break coming up. I'm going to do the whole thing. I'll notate it. It won't take me more than just a couple of minutes. I'll have it all notated, and we'll discuss it historically, because it's just gone above its all-time high since the IPO, which was opening at round number 22. 23.55 was the high. It's at 24.21. Well, I'll be right back. Great chart. I'll be back with Bill from Boca Raton, Florida, straight after this, looking at MPEL.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, everyone. I'm just finishing off right now. I want to do the entire chart. So this is A, that's B. You'll be able to see it. That's C, that's D. It's an instant restart. A, B, C, D, E, weekly. Okay, so we're on with Bill in Boca Raton, Florida. We're looking at MPEL. This is Melka Crown Entertainment Limited, the casinos in China. And I've got the monthly is this. Look at this pattern. This is just textbook. I wonder if I've got it right here. Yep, that's kind of close. This is the pattern that goes to the top. And, well, this is not quite right. But in the ChapmanWave CD, introducing the ChapmanWave methodology, I show the cup formation with the left side, right side price time match, and I think chapter 15. I just wanted to show so that you know what there's a methodology. There it is. Okay, yeah. This is the methodology. You see the patterns here? You can use channels. You can use the cup formation. Use the inside wedge, ChapmanWave inside wedge, etc. Goes from the left side to the right side in a nice price time match from the low. This one seems to fit almost all the categories here in the monthly chart, except the low that I chose is a particular candle that I consider to be very important. If the middle of the chart looks like it's not going to fit, and then the inside wedge is this right here, color pink. I usually do that with a dashed line. Just a nice charting software to do that. So what it's done is gone above the high of 23.55 in December of 2006, when it IPO'd at 22, opening round number 22 on that day, on that month, and it goes to where last month it just nicks it. It goes to 23.39, and this month it's gone to 20, about a penny or so high, just over $1 higher. So the monthly chart so far, nothing wrong. Absolutely looks beautiful. The weekly chart looks beautiful. It's walking the 9-period exponential moving average, but there's a technique that I use that I call the ChapmanWave Instant Restart. That's also in the CD introducing the ChapmanWave methodology. And in this particular instance here, what I've done is that can go to 2 buy modes, and the second buy mode often goes to an E and even an F. Well, this is in leg E after a very quick C to D to E. But I don't have anything technically wrong with it, so I like it. Now, so, Bill, you're not in this. You're looking at it, and you're saying, this is a stock that I like. I'd like to get in. No,
actually, I have a position in it, and I have some monthly calls sold on it, and I just keep. But I think I want to add more. I think the percentage I have in this stock, I think I want more of it.
Okay, so I just wanted to clarify how your position was right now. So let's just look at the stock itself. It's trading at 24.21, just a couple of pennies below the 24.46 high that it made yesterday. Everything about this, especially since the market's now weakening, S&P's down 6.72, Dow's down 7. Dow's holding real well because it's got a couple of real good stocks, Disney, Boeing, what was the DuPont's been fantastic. Just a couple of stocks that are holding it really well. I'm very concerned that my 4 horsemen are not working. Just like I looked at a moment ago, the 3 or 4 horsemen of the NASDAQ are starting to turn down. That should give you caution. But if a stock is acting so well as this one is, I'm going to suggest that you think about this. If it goes above 24.46 on Monday, there's no new high today, that'll be leg C. That gives you still a leg D to go to the upside. The price that I'm looking at now, just on 120-minute charts, is A, B, C, D, E. Yep, this is the pullback we're getting, but it's got the long-legged doji. The support, if at any point this thing goes under 23.44 to 23.20 support, then be careful, because it should take a little while to consolidate, and that consolidation could take it to 21.74. I suspect that this is going to go to 24.35 to 25.01, maybe 24.90. That's the area. So let's look at it together, maybe Tuesday of next week, because that will give us a lot of information. But so far, it looks really good. Thanks so much for calling. Have a great weekend, Bill.
You too, Basil. Take
Folks,
care.
stay tuned for Nico and Paige, and I'll be back on Monday. My service is the opening call.
Are you
Check
looking
it out.